Hi everyone, Tanya Hertz here from San Diego Miramar College in the Get Cooking program. We are going to now talk a little bit about assets, liabilities, expenses, and essentially all the things that you need to know about to complete your bookkeeping, to keep track of your bookkeeping. Okay, so let's go ahead and get started on that. So there are 5 major accounting groups that you need to understand and be aware of in order to keep track of your finances well in bookkeeping, and those include assets, liabilities, equity, income, and expenses. So assets are all of the things that you own, all the tangible and intangible items that your company owns. For example, business may have office material like laptops, cooking equipment, tangible assets, fryers, ovens, plates, knives, your food stuff. You might have intangible assets like goodwill, like design patents, like trademarks. Other items that are included in asset accounts are vehicles, machinery, all your equipment, any property that you actually own, real property that you own, copyright, trademark, logo, cash, accounts receivable. All of these are assets. And in your homework assignment for this section, I give some examples for our Get Cooking Joy from Home sample business owner who makes tamales, and I give you some common restaurant assets that you can use in your taxes and in your bookkeeping. So liabilities are what you owe. So anything that you need to that will reduce your overall equity, anything that you need to pay, any debts, payment obligations, credit cards that you need to pay, any upcoming payment. Those include loans, utility bills, outstanding maintenance costs, overdraft fees, all of your accounts payable, all the salary that you owe, any insurance, anything that you owe, any bills that you have. And when you're recording your bills, your costs, it's important to consider any interest or any potential interest costs to make sure that you're always aware of what your actual liabilities are. So this is just a quick, simple little example of or sample that you can use to look at a company's value. You can look at your bills. So this company has, for example, they owe $400 in utilities. They have a $200 loan, $100 credit card that they need to pay because they bought supplies with it. And so you can find the value of their liabilities by just adding them all together. So they have about $700 in liabilities. We can then use that and plug it into many other formulas to get to valuations. And you're going to need to do that essentially for your budget assignment. And this is going to help for those of you who are getting the Get Cooking loan, it will help us to see exactly how much you need to spend in your business, and so how much we need to write that check for. So you want to think of as many things as you can. I give you lots and lots of samples in that homework assignment, the budget assignment. So equity is what's left over, and what you actually what your own ownership is in the company. So equity accounts show the value that's left in the company's assets after you've removed all of your liabilities or your expenses. So this gives you essentially your current value of the company, your current ownership of the company. So to find the value of your equity account, you'll create a balance sheet with an itemized list of everything that your company owns and owes. And like I said, I have a sample for you that we're going to be going over here in a little bit. You're going to reference your balance sheet to, or you can reference your balance sheet to subtract your total debts or liabilities from your total assets to give you your total equity. So for those of you who have taken finance classes or accounting classes back in the day, you remember this formula a lot, right? Assets plus liabilities equals owner's equity. So this gives you a good picture of what the company is worth at any given time. So here's an example of equity for just some fictitious business company. And like I said in the previous slides, you don't have to do everything yourself, but you need to know what you need to know the basics of these forms so that you can read them and you can understand what they mean when you're looking at them, so you don't get taken advantage of, and so that you always have a good, clear picture of what your company's worth. So here's an example of a company that has 22,075 in assets, 89,38 in liabilities. And to find that equity, all you do is you take the assets minus that liability, gives you the equity value. So assets minus liabilities equals equity value, and that's about 13,000 in equity in that company. Okay, so income is different than profit, right? We said this before. Revenue and income are the same, but that's not the same thing as profit. Income or revenue is all of the money that your company earns from providing what you're providing, whether that's a product, selling a product, or providing a service. So income can include sales revenue from selling a sandwich, or it can include providing a service, like maybe the service includes delivery, right? That could account for some income. It could include anything which is in new businesses not super common, earning interest on bank deposits or earning dividends on any investments that you have. But for bigger businesses, it's a source of income. And then also for typically bigger business or established business, rents received, or but not only for bigger businesses, because maybe you have access to a kitchen and you rent out that kitchen just on your off hours. That's a good source of income. It's important that you look at all potential sources of income and maximize that income that you're getting and minimize those expenses as much as possible. Don't ever be too proud to find ways to cut costs or to bring in extra income to help your business succeed. So expense accounts includes the products or services that a company buys to help generate additional income. So expenses can include things like salaries, the costs that you have for marketing, any costs that go along with your facility or your overhead, any products or services that you need to buy to help you boost your productivity, any dues that you pay, any memberships that you pay, buying an iPad with a Square reader on it to take credit card payments, or maybe using as your point of sale system. All of these expenses you want to keep track of, because remember, that's going to help us if you are part of this Get Cooking program, help us to see how much you need to run your business or start your business if you haven't yet started it. So I'll give you lots of examples. Here's an example of some expenses from a fictitious business here. So you can add up all the costs that you have, like office supplies, operating expenses, payroll expenses, business loan payments, anything that you have, and add those all together to find your total expenses. And I give you lots and lots of sample expenses for a home-based food business. Remember also, if it's a home-based food business, any rent that you pay for living in the house, as long as you're also using that space for a business, that's a deductible expense. So if you pay $2,000 a month in rent and you're using 50% of your home in your business operations, so that means that you're at home using the kitchen, or maybe you're using the office to do your marketing materials, or maybe you're using your bedroom to lay out all of your signs or your platters for your caterings. All of those expenses count towards business expenses. So as long as they're used for both business and personal, any personal expenses count towards business expenses as well, right? So remember, the financial statements that you need to know how to read and prepare are your balance sheet, your P&L, profit and loss statement, your cash flow statement, and your budget. And we're going to give you a template budget here in just a bit. I really highly recommend that you use a program to keep track of all of these expenses. And QuickBooks is what most of us use. There are other programs. It's up to you to use whichever you like, but I like QuickBooks because you don't have to memorize all of the formulas and things like this. All you do is you put in your expenses, you put them into categories, whatever the categories that you choose are, and then you tell QuickBooks to give you a balance sheet or give you a P&L. There are classes you can take on QuickBooks that are really helpful. I took a class at Miramar College, or no, it was Miramar Mesa, several years ago, and it was so helpful. I mean, of course, you can take accounting classes or things, but there's a lot of theory. QuickBooks classes are great because they just tell you how to actually do it. All right, so balance sheet, we talked about it before. Balance sheet is your company's assets, liabilities, and equity. It adds your liabilities, any debt or losses to your equity, what your business is worth to determine the value of your assets. And it's a little, it can be a little confusing because remember, a balance sheet, everything balances out. And so a liability, you think, you know, a liability, it's an expense, right? And so you're thinking, okay, well, that should take away from my company's value. But when you're buying something, a liability, or spending money on something, remember, you're actually buying something that then becomes an asset for the business. So it can be a little confusing. So make sure that when you're inputting all of your information, that you're putting it in the right category and categories that make sense to you. And I think it'll make more sense also when we actually do the assignment together. So P&L provides detailed information on revenues and expenses, like we said. You can use your P&L to create your budget and to calculate how much working capital you actually have. Cash flow statements, again, are different than the other statements, and you do need to keep track of your cash. It's not the same as your revenue. It's not the same as expenses. Cash is the actual true cash that you have available to you. And remember to keep an eye on it, because terms can be bad for new business owners. By terms, I mean like when you have to pay things. So if you have a long accounts payable and a short accounts receivable, or let's say your supplier wants their money right now, but but when you sell something, maybe they want a lot of time to pay you. You have to make sure that you always have enough cash to cover your operating expenses. And so keep an eye on all that. There's a whole video I made on cash flow, and there's another basic QuickBooks cash flow video that you can watch here. And now we're actually going, and this is another great video you can watch, and a lot of other great resources that you can use from Jennifer Barnes, who is one of the mentors here at the Rec Lab, and she is amazing. She's the CEO of Optima Office, an accounting firm here in San Diego, and I highly recommend watching that when you have some time. And now we're going to jump in and start on our taxes. And so we're going to end this video here and then start the next tax video. See you guys in the next video. Bye.